Interest in the world's biggest cryptocurrency has soared this year, with investors viewing Bitcoin as a hedge against inflation and an alternative to the depreciating dollar. The rush led to Bitcoin prices soaring to record peaks. The digital currency is already being referred to as a rival to gold and is establishing itself as a safe haven asset. Welcome back to Hot Crypto Desk, your #1 source on YouTube for all your crypto needs. We are not financial advisors. Please do your own due diligence before buying anything. If you're a crypto beginner wondering how to get started in the crypto space, or an experienced hodler and trader looking for that next altcoin that's going to take off, this channel is the one to be subscribed to for the hottest and most insightful content. In this episode, we are going to be taking a look at how Bitcoin became the digital gold. Let's get started. Bitcoin's competition with gold has already started in our mind, the Wall Street Bank strategist said in a note, citing recent $7 billion outflows from gold and more than $3 billion of inflows into the Grayscale Bitcoin Trust. That could mark a new dawn for the volatile digital currency after years as a play for speculators and retail punters. Considering how big the financial investment into gold is, a crowding out of gold as an alternative currency implies big upside for Bitcoin over the long term, JPM said. Bitcoin is likely to outshine gold as millennials become a more important component of the investment market over time, and given their preference for digital gold over traditional bullion, JPM added. With a market capitalization of $575 billion, the Bitcoin price would need a nearly fivefold jump to $146,000 to match the value of private gold wealth held in gold bars, coins or exchange-traded funds, the bank's note added. JPM strategist said the upside is conditional on the volatility of Bitcoin converging with that of gold in the longer term. Though JPM sees the possibility of current speculative mania propelling Bitcoin to between $50,000 and $100,000, it warned that such levels would prove unsustainable until its volatility levels out. We note that the spectacular Bitcoin rally of the past few weeks has moved Bitcoin into more challenging territory, not only in terms of its positioning backdrop but also in terms of its valuation, the bank said. Gold has traditionally been the ultimate asset used as a backstop for economies and hedge against inflation. Since the end of the gold standard in 1971, gold has significantly outpaced inflation, rising about 7.7% in value per year. This has been accompanied by a realized volatility of 17. Hence, it is flawed to assume that something considered to be a store of value should have a realized return close to inflation with a relatively low amount of risk. Also, an investment in digital gold does not require extreme views on the economy or fiat currency. If you are looking for a potential hedge against inflation, a collapse in real bond yields and/or a devaluation of the US dollar, allocating to digital gold could be a prudent step towards better portfolio diversification. So, how much Bitcoin could safely be used in a portfolio? Multi-asset teams use a complex smart mean variance optimization framework to work out how it could fit into a standard and well-diversified multi-asset fund. This looks at 36 different combinations of Bitcoin's risk, return and correlation with other asset classes. Our results are unambiguous. For all 36 combinations of risk-return correlation, our smart optimization allocates the maximum 2.5% towards Bitcoin, says Blockland. This is better than we anticipated, expecting some drop-off as the combination of characteristics worsens. However, based on our impact analysis, for example, that Bitcoin can represent up to 15% of total portfolio volatility, together with the fact that Bitcoin's volatility is currently still well above our highest estimate of 60%, we believe capping the maximum weight of Bitcoin to 1% is warranted. A 1% weight also better aligns with overall portfolio management, including rebalancing. Well, that brings us to the end of today's video, all about how Bitcoin became the digital gold. What are your thoughts on Bitcoin being the digital version of what gold was traditionally? Would you rather have your money in Bitcoin or solid gold? Get involved and let us know in the comments section down below. If you enjoyed today's episode and found it interesting, make sure to leave us a thumbs up, and don't forget to subscribe to Hot Crypto Desk to be kept up to date with the most insightful content as soon as it's uploaded. Thanks for watching. See you again soon in another video.